Welcome to the Stock Market Daily News podcast for Friday, January 31st, 2026. I'm here to break down yesterday's wild market action and what it means for your portfolio. Major indexes took a dip as the S&P 500 slipped 40 basis points, the Dow lost ground, and the Nasdaq slid nearly 0.5%. The big headline: President Trump nominated Kevin Warsh for Federal Reserve Chair, sending ripples through rates and stocks. We'll dig into why that matters and cover the stunning crypto crash, mixed earnings from tech giants, and a bold bond move in India. Let's jump in. First up, the Fed surprise. President Trump's pick of Kevin Warsh, known for his hawkish take on inflation, rattled U.S. futures. Investors are now scrambling to gauge whether a new Fed chair means fewer rate cuts ahead. The S&P 500 futures dropped 0.4% and the Nasdaq fell nearly 0.5% on this news. Bond yields edged higher, with the 10-year Treasury sitting at 4.25%. The big question: will Warsh stay aggressive against inflation or pivot to more cuts? How he navigates could shape rates, stocks, and risk assets for months to come. Turning to corporate earnings, tech bellwether Microsoft tumbled about 10% after reporting record spending and slowing cloud growth. Investors fear that Microsoft's huge AI investments may take longer to pay off. By the close, Microsoft shed over $300 billion in market cap, its sharpest single-day fall since the pandemic. In contrast, Meta Platforms soared more than 10% on upbeat fourth-quarter results and robust guidance. The takeaway: big tech remains volatile, so investors should brace for choppy moves as earnings come in. On Wall Street, we saw mixed results across sectors. Las Vegas Sands plunged more than 13% after weak Macau profits, and United Rentals sank over 12% on disappointing numbers. Meanwhile, Deckers Outdoor bucked the trend, soaring 11% in pre-market action with strong sales from its Hoka and UGG brands. The message: translation risk, regional growth, and consumer demand are back in focus this earnings season. The crypto world had a rough day, with Bitcoin tumbling to $81,000, a 9-month low. Nearly $1.7 billion in crypto positions were liquidated as nervous traders bailed out, spooked by Fed uncertainty, tech stock weakness, and global tariff talk. Leading exchanges like Binance even tapped plunge protection mode, buying up more Bitcoin to steady the ship. Still, Bitcoin remains down more than 6% for the day, and Ether, Solana, and XRP all suffered similar blows. Funds saw nearly $1 billion in outflows, pushing January's ETF flows into the red. The key lesson: high leverage cuts both ways, and in a cross-asset sell-off, even digital gold shows its cracks. In global news, Muthoot Finance, a leading Indian lender, raised $600 million in its latest overseas bond, at a 5.75% yield, well below initial estimates. This marks India's third dollar bond sale this year and signals that global capital markets remain very much open, despite broader volatility elsewhere. Wrapping up, let's check the closing numbers. S&P 500 finished at 4,900, down 40 points. The Dow closed at 37,000 even, while the Nasdaq slipped to 15,600. Key themes: central bank uncertainty, earnings volatility, and persistent cross-asset risk have all returned to center stage. Looking ahead, watch for fresh earnings from ExxonMobil, Chevron, and American Express today, as well as inflation data that could further steer Fed expectations. Thanks for tuning in to the Stock Market Daily News podcast. Subscribe for your daily market roundup and visit our website for more in-depth analysis. Stay savvy and see you next time.